Hey guys, welcome back. Thank you for tuning in. Like I promised, we'll be doing a review for this week on Nasdaq, Euro USD, DXY, and GBP USD, like we always do, right? So we're gonna kind of mix everything, the market review and the weekly forecast, mix everything, and make sure that the video is as simple and brief as possible, right? Okay, so this is on the right hand side, using this vertical line as a demarcation. This is this week's price action in a glance, right? So what the price do? We had price accumulating, that price accumulating here. That's the power of three, AMD, accumulation and manipulation to take out that buy side liquidity, which is equal highs, and then distribution. So this is kind of a summary of what every week does. It does not matter the pair or the instrument or the assets or whatever you're trading. This is a summary of what every week does, right? So this is what Nasdaq did starting from Monday to Friday. The first went up, took out that buy side liquidity, then all the way down, right? So we're going to be looking at this particular price action, how we could possibly take trades on Monday, Tuesday, Wednesday, Thursday, and Friday, and how we could possibly take trades with the swing trading strategy I taught, I think, a few weeks back. The video is still on this channel. Okay, so first we'll be looking at the monthly chart. We want to see our bias. Why the price do what it did, right? Why was price coming down? So we want to look at the monthly chart first. So on Nasdaq, you can see that since on March, this is the first month we've been bearish, and I think this month will be closing as a bearish candle. Since March, we've always been bullish. March, April, May, June, July, and August is now a bearish month, right? And this bearish month doesn't mean that market have changed trend, like how some guys will say or put it. No, there is no change of trend here. Market is just retracing. In the charts, nothing goes straight. If it goes up, it must surely comes down, then continue going up. If it's going down, it must surely go up, then continue coming down. Right. So now we are retracing into these fair value gaps. We have a fair value gap here, and you can see our price is perfectly respecting that fair value gap. You can see the precision there where the monthly candle is currently sitting at. Now I made mention of if price leaves multiple fair value gaps like this, be rest assured that price will always show that respect for the first fair value gap. Even if price have intentions of going further, even if price has intentions of going further, but it will respect the first fair value gap first, even if it's just very little, to show that respect, or in some cases break that fair value gap and use it as an inverse fair value gap if price is ready to change trend. But if price is not ready to change trend, then you see price respecting that fair value gap like that. And in this case, we have multiple fair value gap. You can see we have another fair value gap down here, and the price is currently on the first fair value gap, and we might likely see price drop into this fair value gap and trade just above the CE before we continue upward. We have this buy side liquidity here, which is a possible target, long-term target for Nasdaq, and we'll hit that. That is our overall target. We'll hit that, but we need to retrace first, or we can call it corrections, or you know take out liquidity that will fuel price back to that buy side liquidity. And let's look at the weekly chart. So this is the weekly chart. We have that buy side liquidity there, and what is price currently reacting to? Price is reacting to a old fair value gap. You can see there that fair value gap have already been traded into, but doesn't matter anyway. No, price still reacts to that fair value gap. Yeah, because according to ICT, his concept, his fair value gaps, and all his teaching is not like the idea of supply and demand. Because most times when guys are trading ICT, they use the idea of supply and demand to trade ICT, but that's not it. the thing about supply and demand is it can only be traded once. It can only be used once, right? That's the general idea of supply and demand. But in fair value gaps, it can be used multiple times. Just like new week opening gaps, new day opening gaps, price can trade into it multiple times. It does not just need to happen once. So you can see this fair value gap that have already been traded multiple times. To some of you, that's not a fair value gap, just because you have that, that idea of supply and demand still in your memory. You need to unlearn that. Okay, so that fair value gap, because it has been traded into, price can still trade into it here. And it's what is holding price right now. To me, I still think we'll push downward because we still have, you can see the unfilled fair value gap there. So price might push downward to trade into that. And on the monthly time frame, we still have unfilled fair value gap below. So I believe we'll see pull downward. But what is holding price currently now? That old fair value gap. It's not random. So let's look at the daily chart. So this is the daily chart. We have relative equal high, relative equal lows here. That's sell side liquidity. We also have the sell side liquidity, and that's inside that fair value gap. On the weekly time frame, it was just a fair value gap the price traded into, and it was an old fair value gap. But now you can see what price is doing. Price took out this old low and take out this old high. Price took out this old low last week. Then this week, price continued by taking out this old high to continue downward. All of this might be random, but trust me, it's not. What does this mean, right? I uploaded a video, I think weeks ago, about best swing trading strategy for massive gains. Yeah, if you've not watched that video, I'll highly recommend that, because most of the things I'm going to be showing you in this video is mind blowing, and I explain them thoroughly in that particular video I just mentioned, that swing trading. So I said something in that video about if price takes out a liquidity on the daily time frame, how can you pick a reversal swing, right? So what's are liquidities? Liquidities can be old low, liquidities can be old high, and most of the time liquidities can be fair value gap. So I made examples of different fair value gaps again, but I did not make any example of a low or a high. But this is it, right? So price took out this high. We are likely looking for a swing entry to take us to the next. So if price took out this low, are likely looking for a swing entry to take us to the next high. Now how do we do that? Let's go down to the 1 hour time frame. So this is the 1 hour time frame. You have that buy side liquidity there, which was previous week low. Sorry, previous week high, right? So price took out that um daily sell side liquidity. Price took that out last week Friday, and you can see what price did this week, taking out that buy side liquidity before selling off. Now if you look at this, how would you possibly pick a trade here? Like, to pick a high probability trade, I'm not just saying going to pick any trade with very low, you know stop loss, so you can get high risk to reward ratio. I'm very sure you have different ways of picking this trade here, picking a trade to this high here, but this is my own special way. This is what I see has 90% win rate and happens almost all the time. I'm going to give more examples in this video, right? So look at that. This is a hourly time frame. So look at that. We have that breaker there. And I said something in that video about price not going below this breaker no matter what. Once price leaves that breaker, takes out a an old low, or let's say old high or fair value gap, then comes back to break that high, we have what? We have a positive breaker. On the 1 hour time frame, we want to find the last candle before the last up close candle before the price went down. Trust me, that's not that block, because most times I think SMC, or the idea of supply and demand, and ICT, they kind of contradict each other. So it's very hard if you say you want to take those two ideas to trade them together. Because for what I know, because I've traded supply and demand before, for what I know, using supply and demand, this is a supply, and price will just, or let's say another block, however I want to call it, and there are people there who are punching sell buttons just there. They're punching sell buttons. But the price took them out, came back there, and went up. So this was my trade, and please be well assured that I will not and I will never do a review for a trade I did not take. Please note that I will not and I will never do a review for a trade that I did not take. If I did not take a trade that day on or any specific day, I'll tell you I not take a trade. If I take a trade, I'll show you the trade I took or how you could take that trade if I was off the chart, right? So now we have this breaker, and this was my entry for this trade. My entry was there just at the beginning of that breaker. My stop loss just at the middle of this fair value gap, and I was targeting the highs. So I think on Wednesday, this particular trade, hit profit target on Wednesday night, West Africa time. I was on a space back then. I think some of you guys in my community were on that space too, where I kind of give an excuse to close my trades because I set alerts on that high. So just immediately I was about to speak on that space, then my alerts rang off, so I went to close my trade. That was the trade I was holding, and is it even a swing trade? I don't think, because I was holding the trade for only 35 hours, so it's not really much of a swing trade, but it's high probability. I thought about this particular type of setup. If you've not learned it, please, you're wasting too much time. This setup, you can see if you are a student, this is the kind of setup that you just come in a week, set your limit order, and boom, just leave it there. Hit profit target, and you go on doing what you're doing. If you're working 9 to 5, or if you're a student, these are the kind of trades you'll be looking for. They have incredible win rates. Trust me, it will blow your mind. So let's look at Monday on Nasdaq. We've talked about how I picked the swing trade. You know, my swing trading is not trades I hold for 2 weeks, or 3 weeks, 4 weeks, or even a month. I don't hold swing trades like that. My swing trade is within that week. Within that week, I use the idea of accumulation, manipulation, and distribution for my swing trade, and I use the same idea, the idea I taught on that video, best swing trading strategy for massive gains. That idea, that's what I use to hold my swing trades, and trust me, it's just about a matter of, like, you say, 2 or 3 days, that and my trade will hit profit targets. These are the kind of trades you want to pick as a student. And the thing is that it does not happen only on Nasdaq. Trust me, it happens on crypto pairs. It happens on GBP USD, Euro USD, currency pairs, anything. I'm going to show you my example. So you see that it's algorithm, not just random, and not pushed by buying or selling pressure, right? So now let's do a review on Monday. What was it I traded on Monday? Okay, so like I said, in the community, in the Telegram community, if you're not in the Telegram community, please check the description of this video to join. That's where the mentorship goes on or takes place. Okay, so like I said, that once the day opens, if you're trading New York, once once approaching your time, your session, outline all possible DOL on the chart. That's drawn liquidity. So you can outline the new week opening gap. You can see there. You can outline this fair value gaps. You can also align this, sell side liquidity, all these fair value gaps. But look at what price does. Price came back for that sell side liquidity before going higher. Yeah, I know. You'll be asking a lot of questions. What about this fair value gap? But what about that fair value gap? Was that a very good place to pick a trade? Well, answer is no. That was not a good place to pick a trade. Although I had it outlined, what I was just looking for was what? Confirmation. If price give me a confirmation that it wants to use that 15-minute fair value gap, then of course nothing will stop me from using it. But I had that 15-minute fair value gap outlined, I had the sell side liquidity outlined, and price just came for the sell side liquidity. And going down to the 5-minute time frame, you can see what price does. Inside that fair value gap, there's nothing, there's no confirmation. Nothing on earth is telling you to buy there. Nothing. Price just keep going lower, and after it takes out the sell side liquidity, you can see what price does on the 5-minute time frame. Price broke this high, leaving a fair value gap, making it a unicorn. So all you'll be waiting for here is for price to just trade back into that fair value gap, and boom, we pick our trade. But price did not trade back into that fair value gap, but we have another high here, so chill. Okay, price broke this high here, leaving a fair value gap, and you can see that fair value gap, and traded slightly into that favorable gap before going up. That's your entry, or rather, that was my entry. This thing takes time, takes experience. You need to study these things before you get familiar with these things. Because trust me, the same way I was looking at the charts, looking at these specific things, you two were looking at the same chart, but you were not seeing these things I was seeing. Okay, it's like I spent more time studying these things, so it's very very easy for me to spot out these things. That's why I'm reviewing these trades for you to see how I possibly took this trade, so you can go back, pick your chart, pick your notebook, study and write these things down, your new observations, how I pick this trade, and go to your chart. Try to find these things. So if it occurs again, because what I trade is something that repeats itself almost every week, every month, every year. Okay, so there is our unicorn entry, and like I said, for Nasdaq, unicorn entry is like the entry I use 70% of the time. That's the entry that happens. If you want to wait for price to trade back to the other block, sorry is your name. If you're trading Nasdaq and you're using other block, sorry is your name. I'm not debunking other block, or other block work very very fine. Other block works. I'm not debunking it. I'm just saying that if you're trading Nasdaq and you're waiting for that block, you miss a lot of trades. Okay, so go and learn the lower time frame entry secret. I taught that lecture video. Just go there, spend time, and digest everything I talked about in that video, and go to your chart, and trust me, you find them. Okay, so my target was just at this high. That was where my target was. So after taking that high, that was all for Monday's trade. Okay, so let's go to Tuesday. So Tuesday we had price was still above. So we had what sell side liquidity. Since we had an overall target, that's the previous week high. That's where the swing trading profit targets was. Okay, so that was like a manipulation phase draw liquidity. So what you want to do in a new day, you want price to trade into a previous day low, then go down and go reverse to the bias, like the bias direction. Now during New York, I made mention of this thing this week in the Telegram community. I said in London, if price have not traded into the previous day drawn liquidity or the potential drawn liquidity, and expect New York to do that. So during New York, what you do is either wait for price to reach for this outside liquidity, or you find entry that will take you to that outside liquidity. That's what happens. Like it's called continuation entries, and continuation entries are with like inverse favorable gaps and intraday favorable gaps. Right now, looking at this on Tuesday, we have this 15-minute time frame, and that candle, this long black candle, that bearish candle there, was equities open 9:30. Price just slashed it down, leaving a favorable gap there, 15-minute favorable gap, also known as the intraday EMD, according to what I taught you guys. Right, so if you're waiting for price to trade back into that, you see that price did not do that. Price did not trade back into that. But the question is why? Why did price not trade back into that? Well, you are looking at just one time frame. Let's go to the 5 minute time frame. So looking at the 5 minute time frame, you can see using this red horizontal line, you can see that that's the 5 minute fair value gap, and you can see how price traded into the 5 minute fair value gap, but ignored the 15-minute fair value gap. You can see this is the 15-minute fair value gap. Price ignored that and traded into the 5 minute fair value gap. So some of the times you need to be very very flexible with the time frame you use. If you're using only one time frame, you see that price will just go and leave you. But immediately that 9:30, price slashed down, leave a fair value gap on the 5 minute, and price traded into that. That will take you all the way to where, to the sell side liquidity. Now that is your trade. Perfecto. This was about 6 weeks to reverse. Very, very good trade. From there, you offload all your profit target and expect price to return or reverse. Let's look at Wednesday. So Wednesday, the possible draw liquidity we had was the new day opening gap and the previous day low, right? So my own idea, which is very very simple, is on a new day outline all the possible draw liquidity on the charts. Just chill, wait for the one price will react to. Okay, so my new day opening gap was outlined, and just before 8:30 there, price dropped into that new day opening gap, and by 8:30 which is that the New York session. You start looking for trade, and let's see how we could possibly pick a trade there on Wednesday. I know most of you must have missed that, but let's see how we could do it. So Wednesday, the 5 minute time frame, you can see all of these things I'm doing. I've not gone to the 1 minute time frame. Although I pick most of my trades. Like I mean, most of my trades I pick them on the 1 minute time frame. But I still like, I don't know how to put it. If you've been seeing my chart lately, I pick two trades. You know, the 1 minute time frame entry and the 5 minute time frame entry. So kind of like two entries in one trade. Okay. So and what I'm showing you is the 5 minute time frame entry. If I start showing the 1 minute time frame entry, you get confused because it's very, very confusing, very complex. Okay. So we'll stick to the 5 minute time frame entry. All right. So during 8:30, the price starts going higher. You can see how price is respecting this new day opening gap. Perfect, very precise. And we expect price to break this high, but price failed to do that, then retraced back and finally break that high. So after price broke that high, what are we doing? The unicorn. I know some of you argue it's breaker, it's that, it's mitigation block, it's this block and that block. But trust me, guys, just to simplify things, this is a unicorn entry, right? Price left a favorable gap just through that high. This favorable gap there. In this case, you are not expecting price to come back to any other block or anything. You are expecting price to just trade into that favorable gap and boom, that's your trade. You can see that. That's that shaded area. That's my trade. That was my trade. So punch a lot of buttons there and you are gone. Very good risk to reward ratio. Price took out that target finally. So that was how I could pick trades on Wednesday. You can see very, very simple. No complications, no beautifying of your charts. You just need one high and one shaded area, then boom, punch buttons and pick your trade. You just need to understand the narrative of these things, not the structure. Okay, so let's look at Thursday. Okay, on Thursday, I'm not gonna lie, I did not pick any trade on Thursday, because I had no entry. Yeah, no entry on the 1 minute, no entry on the 5 minutes. Thursday's spooling was way too much. In fact, all the price action that occurred on Wednesday, sorry, on Monday, Tuesday, Wednesday, Thursday covered them all in just one day. So all this, struggling to go up on Monday, struggling to go up on Tuesday, struggling to go up on Wednesday. Thursday just came and brought everything down back in just very one session, only New York session. Everything just went down. So if I was to pick a trade or the trade I wanted to pick, let's use it like that, was the intraday MD. So using the 15-minute time frame, we have that favorable gap just before New York session. So I wanted price to trade into that favorable gap, give me a entry pattern, so I could pick there. And luckily for me, price traded into that favorable gap, but immediately 9:30, price gave me no entry. You can see the 5 minute time frame. Price just kept pulling downward. Oh, it was so annoying, but it is what it is. You cannot force trade, and I like to outline these things. Some of you in the community, I noticed that some of you force this trade because from what I teach, I don't know about you, but from what I teach, there's no possible way we could pick trade here without with confirmation, except you just used the 15-minute time frame and start punching buttons there to sell without waiting for confirmation. I do not teach that. I don't do that. But if you think that's going to be very profitable for you, then do it. It's okay to make profits gambling just once, but when you get used to it, you regret it because you lose a whole lot of money, right? So let's go to Friday. And now, just the recent video I uploaded, ICT Friday setup, random, right? Well, Fridays are always Fridays. It always happens the same way. See, what you want to check in a week, if you are looking to trade Friday, this is what you want to do. You want to check in a week if that the week distribution phase is it bearish or bullish. That's what you want to check. If that week's distribution phase was bullish, now according to the ICT Friday setup I uploaded, just days ago. You can go and check that video. It please, if you are listening to this right now, make sure you watch that video. Now, if the distribution phase of that week was bullish, what you do is wait for Friday to take out any known high on Friday. That high could be that current day high or the previous day high. Just wait for Friday to take out any known high. Once price takes out that high, it could be that's the buy side liquidity. Just trade it down, bring it down. You start selling from there. Find a good entry and start selling from there. Now, if the distribution phase was bearish, like this particular week we are reviewing, the distribution phase was bearish, which occurred only Thursday and Friday. If the distribution phase was bearish, what do you want to do? You want price to take out any known low. That low could be previous week low or current day low, but it should take that low during New York session. If that low is taken in London session, it is not recognized. Price will still come for it in New York session. So you don't become the liquidity. Understand this. This is narrative. You can play this video back again and make sure you pen down everything I'm saying right now in your journal, because next week Friday, if you guys are not taking the same setup with me, I'm going to be very pissed, right? So what happened there was that I knew price. I dropped this earlier on the chart on the community. Yeah, that price was going to come for this outside liquidity, but it needed a liquidity to come for this liquidity. You can see how it is. In some cases, price uses a fair value gap to come for this liquidity. But in this case, there was no previous day fair value gap. The nearest liquidity was just a previous day high. So I knew that price would come for this liquidity. And I took a sell there. And I knew that price will reject after taking out this liquidity, because this is Friday. Distribution phase was bearish, and the Friday setup, price needs to trade back into weekly range. Go back and watch that video. You understand why price needs to trade back into weekly range, right? So I still picked this trade, closing at the rejection block. What do I mean? Okay, so price took out that sell side liquidity, and this was my original trade, right? This particular trade, I used a very low lot size because that was not my trade. That was not the trade I was looking at on Friday. I used a very low lot size. Then this was my original trade, the buy, which is the original Friday setup. So price, there was no high here for price to break, causing the OT or the simple entry module. So price created a new high, broke that high, left a fair value gap, traded into that fair value gap, and boom, that's our trade. Very simple. Price trade into that rejection block. Even though we are yet to take out that buy side liquidity, which price will do next week, hopefully, but rejection block was the main target, was the first drawn liquidity at least to offload all your target, right? So that's all the possible trade that I took this week, and it was a very, very wonderful week. You see, Monday, Tuesday, Wednesday, Thursday, Friday. If you missed some, then be rest assured that you still need to get your ass to work, study these things and understand these things so you don't miss trades next week again. All right. So let's look at our pre-weekly forecasts. As our custom is, we start with DXY. Okay, so we have dollar index on the chart, and this is the monthly chart. So we want to start to break down from the monthly time frame and see what dollar is really up to, right? So on the monthly time frame, you can see what price is reacting to. Price is reacting to this monthly fair value gap, and you can see the perfect taking out this sell side liquidity. We also have a CB here, that's a sell side imbalance, buy side inefficiency on the monthly chart, and I believe price will go for it. Yeah, I'm very, very sure price will go for it. But let's look at the weekly chart. So on the weekly chart, we have that's the fair value gap there, and we have this sell side liquidity where price dropped equal lows, and price took it out just a few weeks ago, or I think that was last month if I'm not mistaken, and we are heading towards what this buy side liquidity here, and that's where I want to see price first coming to. Then the next one, we could see price coming to this fair value gap, and please pay attention to how I draw my fair value gap. Like I mentioned earlier, fair value gaps can be traded into again, because to some of you this fair value gap is already traded into, and if you want to mark that fair value gap, yeah, I do see this a lot on many people charts. If you want to mark that favorable gap here, this is what you guys do. You mark this low and mark this high, ignoring this other high. But trust me, this is totally wrong. I know that there's no like there's no much of a point there in drawing the value gap very perfect or whatsoever. But I see this in you guys chat a lot, and this is wrong. The fair value gap should be originally at the high, the third candle high. All right. So that's where exactly I'm expecting price to trade into. Now, if you go to the daily time frame, refine that fair value gap. This is the only place that's inefficient. You can see that that's the only zone that's inefficient. So price takes out equal lows, and we are going for a buy side liquidity, and if possible, this other fair value gap on the daily time frame. So this is what I'm expecting DXY to do. So we are very, very bullish on dollar index at the moment. Very bullish. At least to that high. You could see a retracement. But if you are bullish on dollar index, you can see that that's why Euro USD, GBP USD, Nasdaq is selling. So you can see the correlations there, right? All right, without wasting much time, let's look at Euro USD and what is in. You can see price is you can see our price on this is the monthly chart, Euro USD. You can see our price reacted to that fair value gap there. Like I said, always know how to do a fair value gap. Very, very perfect. Because price already traded into that fair value gap does not mean it's not going to trade again. This is not supply and demand. You can see our price traded into that fair value gap again. And we have our high, our low, giving us our premium and discount. And you can see price is already in a price already traded into a premium. Now, looking at the order flow, I'm not going to say looking at the structure. Also, looking at the order flow on Euro USD, we are very bearish, right? If you trade structure to like the market structure, you can see that it's very bearish too. According to your idea, the higher high is higher low. Sorry, lower high, lower low, lower high, lower low, and so forth. This is very bearish. No matter the strategy you trade or whatever, trend line, ICT, SMC, this is bearish. You can see that. Now, price traded into a discount, sorry, a premium to sell off. And is price really going to start selling off from there? Well, to me, Euro USD, I think Euro USD is heavily bearish right now. It's heavily bearish. Why? Let's look at the weekly chart. So on the weekly chart, just inside that premium, there's a volume imbalance there. Of course, you can see which have already been traded into, and price still traded into it again with maximum respect. You can see that. See how the candles are respecting that volume imbalance. And where's our target for this sell-off? Possibly first target will be this low, but original target should be this low. Because this low and this low are relatively equal, making this the original sell side liquidity. So I'm expecting price to come for that sell side liquidity. I don't know how long it will take because this is a weekly chart. So it could take 4 weeks, 6 weeks. I don't know for sure, but I'm expecting price to come for that sell side liquidity. That's my long-term bias on Euro USD, right? So let's look at the daily time frame on Euro USD. Well, normally for Nasdaq, price do leave something like a fair value gap or a CB or a short-term high for price to take out and continue. You can see Euro USD here. Okay, let's start from here. You can see how price traded into that fair value gap slightly, then continue. Then in this case, there was no fair value gap, but price traded taking out this relative equal high. I hope you can see where my cursor is. Price take out that relative equal high. With this week, then continue. And price is still doing the same thing again, leaving this equal highs. You can see that the price is likely to take that out too and continue to the original sell-side liquidity. Now looking at the hourly time frame, this is Euro USD this week, and well, I'm going to bring your attention again to the swing trading strategy I uploaded on YouTube. Like I said, if you've not watched that video, you're missing a lot. So this is what happened on Euro USD this week. I did not know. I don't know how you picked all your trades intraday on Monday, Tuesday, Wednesday, Thursday, Friday. I don't know how you pick your trades on Euro USD, but if I were to trade Euro USD, this is what I would do: the manipulation and the distribution phase. Okay, so price accumulated here, manipulate, just early, just early that week, taking out previous week high, which can also be buy side liquidity, then start selling off. Now look at this. I don't know how would you possibly pick your entry, because to some people, mm, I'm not bashing anybody's strategy, but some people they have the other block here or their supply, whatever, and expect price to trade into that supply before selling off. Well, well, that's your strategy. I'm not bashing that. But if I were to pick a trade here, just like I did on Nasdaq, this will be my trade. You can see that shaded area, that breaker, that will be my trade. I can bet with you 90% of the time that price will not go beyond that breaker. Buying or selling, I can bet with you 90% of the time. That's the win rate this particular strategy, this particular setup has. That price won't go beyond that breaker. You can adopt this, trade anything, currency pairs, crypto pairs, indices, synthetic. This thing works on all markets, any market condition at all. This is a very high win rate, and I've been using it for a very long time before I decided to, drop the video on YouTube. So that there will be my entry if I were to trade Euro USD. Target a 3 weeks reward ratio at least. Stop loss just above this candle's high that has the inefficiency, and entry just at the bottom of that or at the top of that breaker. You can see I'm betting with you that 90% of the time price is not going beyond that breaker. Trust me. So that's Euro USD. You can see I showed you this same example on Nasdaq. Now I'm showing the same setup on Euro USD. So you see it's not just limited to Nasdaq alone. Right. Now let's look at GBP USD. So I mostly review this particular pairs because these are the most traded pairs in the forex industry, right? I might start reviewing Bitcoin, like in a kind of swing trading idea. I might start reviewing, or long term bias. I might start reviewing Bitcoin. But if you want me to start reviewing Bitcoin, then drop a comment on the comment section and let me know. Well, so this is the monthly chart for GBP USD. You can see everything GBP USD have been doing, just ranging, going up and down. Of course, that's how the chart moves. But you can see just recently, price took out a very old low, social liquidity, then start buying. Well, the question is price ready to buy here, or is it just trading into a premium? Well, look at the weekly chart. We have price trading into this value gap and respecting that. We also have these relative equal highs, buy side liquidity. Well, I think this will be a target for the long term. This will be a very, very good target for the long term because price already swept this high and this low and traded into this fair value gap just to retrace. So this is like what Nasdaq is doing, a retracement to continue upward, right? So that's the weekly chart on GBP USD. Now the daily chart, you can see price already took a sell side liquidity, just exactly what Nasdaq did, taking out the sell side liquidity, and we have a pending liquidity here, a pending buy side liquidity. Price could take that out this coming week. I don't know, but that's what GBP US is telling me. Now, just like Nasdaq, after price took out an old low, what happened? Price just started buying to take out the buy side liquidity targets, right? So if this setup plays out, just let me know in the Telegram community, right? I'll be very, very glad to see it playing out. Well, let's look at GBP USD weekly. So let's do a little review for GBP USD. Now this is this week, this particular week on GBP USD. This is Monday, Tuesday, Wednesday, Thursday, and Friday. This is 1 week in general. And using the ICT power of 3, what happened this week? Price accumulated, you can see there's a very long accumulation. Manipulated to take out that buy side liquidity or the previous week high, then distributed. Like textbook, very simple, no complications. Bro, I want you to pause the video. I've shown you an example on Nasdaq, shown you an example on Euro USD. Now I want you to pause the video and tell me how you could possibly pick a trade on this chart like this on GBP USD, like the swing trading strategy. Pause the video, do outline it. Just use your pen, just outline it. Drop it on the comment section or on the Telegram community. Let me see. How could you possibly pick trade on this chart? Well, if I were to trade GBP USD, well, I'll do this. That's my breaker there. And you can see, trust me when I say trust me, price is not going to be above that breaker. Bearish or bullish, price is not going above that. It's kind of mandatory. It's algorithmic, right? So while you're waiting for your supply or your order block, price have done something here. Price have done its job here and is ready to pack out. You can see that. So price left that breaker. I know some of you be asking, why not this breaker? Why not this breaker? I read your mind, right? So that's not the original start of the buy. Breaker means you need to find the original starting of the the like upward movement. So that's the last down close candle before price starts, buying. So that's going to be our breaker. And I would like pick trade here, just at the bottom of that breaker. Stop loss here at that high, then take profit here. 3 to reward ratio, very good trade, and no complications. If you're a student, you just need to do. You can see 3 setups in just 1 week with 3 different pairs. So let's say if you're a student or you're working 9 to 5 or you're working full time and you don't have time to be trading intraday like that. So just come find these particular setups every single week on Nasdaq, on GBP USD, on Euro USD. You can add one crypto pair there. Then find this particular setup, pick your trade. You can see 3 to 1 ratio here, 3 to 1 ratio here. Nasdaq was 4 to 1 ratio. That's 10 to 1 ratio for the week. In a week, trust me, very simple. Good win rate, 90% win rate, and you pick a trade. Trust me, whatever I teach is very practical. I don't teach the theory. I teach practical things that repeat itself, things that happen all the time, not something that just happens once in a year and bring it to create content. That's not what I do. Be rest assured that if you're following this particular channel, your the way you view the market, your technicals, your fundamentals, even your psychology must have increased. Yeah, I don't need to say that. You know it. You yourself know it. Right? But I appreciate you for tuning in. Right? Without you, we wouldn't have reached this particular level. And I can see that the channel keeps growing. And I appreciate all of you that are always sharing the channel videos on your WhatsApp status, on your WhatsApp community, on your Twitter handle. Because most of the times I'll just see guys coming to my DM and see, boss, please, give me the latest YouTube video. Let me share on my community and stuff like that. I'm very very um happy and grateful when I see such things like that. It feels like my effort are not being wasted. So this is a review and the weekly forecast. What I want to see happen on Nasdaq. I told you on Nasdaq we have a monthly multiple monthly fair gap. So we can see price straight downward on the weekly time frame. Price already took out the buy side liquidity, so we can see it go further downward. On dollar index, we are buying, so which means most of its quote pairs will be selling. On Euro USD, we have a original sell side liquidity as our overall target. On GBP USD, we just took out a sell side liquidity, which is here you can see that just took out the sell side liquidity, and buy side liquidity could be the next potential target. Although don't take my word for it, this is just for educational purposes. I'll still urge you to go to your charts. Anything you've learned here daily, just write them on your journal. Go to your charts, study this week, and just try at least to be 1% better every single day. If you're not making profits, you're 1% better in experience, or you're 1% wise than yesterday. Okay. So thank you for tuning in. I really appreciate it. Now, if you find this video insightful, don't forget to like and also share to your friends and other traders out there. Okay, so until next time, be safe.